I love giving credit where credit is due, and this goes out to Danielle DiMartino Bruth. She brought this up, which I have since researched, something called the Sahm rule. It goes to Claudia Sahm, Federal Reserve economist and now Blue Moon columnist, talking about the Sahm rules. Taylor, have you heard of this, or you want me to read it to you?
No, I have not. So please inform me.
Post the start of a recession when the 3-month moving average of the unemployment rate rises by half percentage point or more relative to its low during the previous 12 months. And the reason this is important is we just posted a 3.9 and our cycle low is 3.4. So if you're good at math, there's your half a point.
But
So
hold on, because maybe I misheard this. We're talking about a 3-month moving average
true.
too, correct?
3-month moving average, correct. So we're
Okay, so
not
we're not
quite
that we're not
there.
there yet. Okay, gotcha.
It's coming,
It's
right?
coming.
Just
Yeah, we're at a half a point now, and if it doesn't look all that likely, unemployment's coming back down from here, right?
yeah,
That's not the
yeah. Yeah,
so
that's
we're gonna
not the
we're gonna be
direction
there
we're
soon
going.
enough. Right.
Yeah, yeah, and I back to kind of video number one where the Fed was again, I think more dovish, certainly more dovish than I expected. You don't agree, which is awesome in disagreement. I think Powell. Well, let me ask you this: I have heard Powell say in the past that he gets economic data a day before it posts. I've heard him say that.
Yep.
We just had a Fed meeting that went Tuesday, Wednesday.
Yep.
But we had the Economic Bureau of Labor and Statistics number coming Friday.
Yep.
I am willing to bet they had that number early. What do you think?
I tend to think you're right, and that makes their decision so much easier if they can see an employment number that came down. We didn't add as many jobs. I've heard him say, not quantify it, but I've heard him talk about the sluice report specifically a couple
Yes.
meetings ago where he's like, you guys are going to see it next week. Here's what it's going to say. It's not going to surprise you. So yes, he's definitely getting information early. How early? I don't know, but I'm with you on that. That made that decision very, very
Yeah,
easy.
that became a very easy discussion. We were growing less, it's below expectation, and we whacked 111,000 from previous months. Not good.
Yep. Now, what is it? 7 or 8 months now that every single time we've had an employment number looking backwards, they've been revised downward. That's not a good sign, folks.
You know what? Don't quote me on this, but I think it's been every month this year. So what would that be?
I
guess
believe
that's
you're right. I believe you're
yeah.
right.
So that is 9 months, right? Because we're 1 month lag.
Yep.
So
Yep. Yep.
that's not good.
No, no, that's not. So I put out a video today on Instagram, and this isn't totally correlate with everything, but like last month or last week, the stock market had its best year since November of
Best week. It
2022.
had its best week.
Best week, yeah. If I misspoke, yeah, best week since
Yeah.
November of
Not best year.
2022.
It's the
There was
best week of the year. Yeah.
correct, yeah, and it was all on weak economic data.
Yeah.
Like I don't love the
Bad
good
news
news
is good news.
or bad news is good news. Right, exactly. Those aren't rallies I tend to really want to throw all my money at. Call me silly, but
Oh, that's funny. I got a question. When you look at the market, and maybe you thought about it over the weekend, because that's 6% move and the 10% drop in the 10-year, right? 5 to 4.5 roughly.
Yep.
Those are I heard the drop in the 10-year in 3 days was a 4 sigma move. I don't know if that's true, but
I don't know
if
the
true,
numbers on
that's
that, but that wouldn't shock me.
if that's like 4 sigma, folks. If you don't know what that means, that's like really, really into the tail.
That's like 0.0007% of the time.
Yeah. It's like way out there. If that's true, it's a 4 sigma move. To me, it had to be short covering. It had to be people positioned wrong that just fed on it. That's the only way I think you get a 4 sigma move.
Yeah. What happened last week was we had a relative strength index, so RSI, that came in on the really lower end of the bound. So 30 to 70 is kind of where stocks normally trade. The S&P 500 was right on that 30 mark after coming down for basically since July 31st. And it hit simultaneously with the dovish Fed, we'll call it, simultaneous with PMI numbers that came in weak, simultaneous with employment numbers coming in weak, and the market finally saying, all right, Fed's done. Boom,
Yep.
off to
Boom.
the races.
Fed's done. That's really what that was. And that's a lot of people kind of repositioning
It was
themselves.
a coiled spring. It was a coiled spring. If we got any news there that was warranted, an upward movement, bang.
So really back to the Sahm rule, right? Because again, there's really two things that are driving the market, inflation being one and the job market being the other. Again, I think the Fed is looking at the job market and going, finally,
Yep.
finally, because not only job weakness, not only a rise in unemployment, but the wage spiral that story is weakening as wages kind of come in month after month.
Yep. And yeah, I mean, to your point, the likelihood of rate hikes has come down meaningfully, and I think that
Done.
that's
Done.
totally logical. But what I don't subscribe to, and you don't either, and we talked about this on our prior video, is like the cuts on the other side. We're just not there yet. That's just
No.
not reality. And so when you start pricing in cuts, that obviously gets stock market movement higher. And then if they don't come to fruition, stocks got to give some back. And the tenor out of the Fed right now is not 4 rate cuts next year. The
How
tenor out of the
long?
Fed
Yeah.
is we're not sure that we are sufficiently restrictive. That is the exact opposite of saying we're going to cut.
You may not know this, but I'm going to ask it anyway. The market
Yep.
has been begging for cuts and having to move back the dates for what, a year and a half now? I
Yeah.
mean,
Yeah.
every Fed meeting, it's like, oh, we'll go back a little bit. Oh, we'll go back a little bit. I don't know. They're addicted to low rates, I guess.
This is the first one that's reverse course. So if you look back to the beginning of this year, there was 5 rate cuts at the beginning of this
Okay.
year that the market was pricing in
5.
for 2024. And
Okay.
so then what we had was we peeled off 2 of them and it came
Uh-huh.
down to 3 rate cuts being priced in for 2024. After
Okay.
this meeting, another one was tacked back on, going to 4 rate cuts for next year. So this is the
So
first one that's actually built back rate cuts into next year. It was
that's
going the other way
interesting.
before.
That's
The market
interesting.
took that as very dovish.
Oh,
Clearly.
yeah. Well, there's one last thing that not enough people talk about, and that is kind of the real rate,
Yep.
right? So again, we'll
Yep.
use round numbers, right? The real rate, if the 10-year treasury is 5 and inflation is 3, the real rate is 2.
Correct.
Very simple, right?
Yep.
If you are the market and you believe the Fed wants to keep a 2-year 2% real rate, right? That's reasonable.
Yep.
If they call 2% restrictive, real rate restrictive, and
Yep.
then it's just an assumption, inflation goes from 3 to 2,
Yep.
you can have 100 basis points a cut and
Yep.
still be equally restrictive. Maybe that's what the market is calling.
Oh, I'm not saying that it's totally illogical. What I'm saying is the inflation data doesn't
Doesn't
allude
support
to
it. Yeah.
inflation coming down that much, right? So once it starts to become clear that that's the
Yeah.
case, then that's okay. But we're not there yet, and the
Yeah.
market is always forward looking. So maybe this is the first time the market has it right because the market's been wrong. They've been way more dovish or Pollyannish. Another way of putting that, they've thought that all things were going to be clear much sooner than they have been.
Yeah.
And it's
So
funny. It's funny also because the market also gives them a ton of shit for being transparent on the front end. So you weren't to work fast enough on the front end, and now we're beating you up because you're behind the 8 ball and you should be cutting rates on the other end. It's like these people can't win.
yeah. Talk about a job I don't want.
Who
Man,
wants to be elected to public office? Not me.
not me. Don't sign me up for that. Oh my goodness. So at the end of the day, I think it's fair to say that we will have a recession at some point in the future. The only interesting thing is when. The Sahm rule is basically saying it should start now or should start very soon when we get the 3-month average up 0.5 point. Taylor, when should people follow you?
Follow us at Life Goal Investments. We're on both Instagram and on TikTok.
Thank you, buddy. I appreciate you.
Thanks, Michael.